Hello, dear students. In today's class, we'll revise the theory of business arithmetic unit 5. You all are aware that unit 5 is mainly about the practical portion, which includes working capital, economic order quantity, ROI, ROE, and the break even point practicals. But other than that, you can expect the theory of this chapter also. So, in today's class, I'm going to cover the theory of unit 5. Here you can see the mind map of unit 5. I have created this mind map by considering the all the main points which you people are expected to write down in your answer sheet. So let's start with the theory now. The first concept which is there, that is unit of sale. You all are aware about unit of sale. You have done it in your class 11. Basically, what is unit of sale? Unit of sale is the yardstick to measure the quantity. Like if a seller is selling only one product, let us seller is selling apples, then his unit of sale will be apple are sold in kgs, so his unit of sale is kg. If a person is selling milk, then milk is measured in liter, so his unit of then in that case milk unit of sale is liter. But what if a seller is selling multiple products? In case of grocery store, in case of departmental store, then how a person decides what is the unit of sale? In class 12, the whole class 12 focuses only on multiple products. So in case of class 12, unit of sale is customers. Unit of sale is customers. So if in your board exam you get a question that a person is operating or managing a grocery store or departmental store or a saloon, with the person provides multiple products or multiple services, then the unit of identify the unit of sale, you will say unit of sale is customer. Okay, now let's come to the come and understand the meaning of the importance of unit of sale. That what is the use of unit of sale? In your book, as it is, use of unit of sale is not written, but when you will open the chapter, the very first two lines in your chapter are about unit of sale. So they are basically, we can say, the use is, what is the use of unit of sale? The very first use of unit of sale is that it helps in understanding the economics of the business. What is the meaning of economics? Economics is related with all the financial aspects. How many units are sold, what is the cost, what is the selling price. So you can measure it if you have a exact unit of sale. So just learn it. It helps in measuring the economics of the business. Now it also helps in tracking the progress. Tracking the progress, like if you say, ma'am, okay, our sales have increased, today our sales are better than yesterday. Okay, I'll say, okay, what do you mean by how much better? Then you have to tell me the quantity. So you will say, ma'am, yesterday we sold 500 kg apples and today we sold 300 kg apples. Okay, so it helps in tracking the progress, that whether we are progressing or we are shifting back. Now, once you will get to know the progress, what I told you, yesterday you sold 500 apples and today you sold 300 apples. It means your sales have decreased. It means, oh, now it's a time to take the corrective action. So unit of sale helps in tracking the progress, which further helps in taking corrective action. Done. So what is the unit of sale? The meaning of unit of sale is the yardstick to measure the quantity is called unit of sale. There are two uses of unit of sale. It helps in measuring the economics of the business. It helps in tracking the progress and helps in taking the corrective action. Now after unit of sale, what is unit price? We all know price. Wherever you read the word price, class 12, always remember this price is always the selling price, and unit means only one. Unit means only one. The selling price of one unit, is called unit price. Okay, now in case of when a seller is selling multiple products, in that case, as I told you, if unit of sale is customer, so in this case, when the seller is selling multiple products, the definition of unit of sale becomes the average purchases made by one customer is unit price, and the unit price formula is total billed amount upon total number of customers. Then what is unit cost? Unit cost means cost of making the product, unit means one. So the cost of making one product is called unit cost. But stop here. This unit cost includes only and only variable cost. We know there are two type of cost, fixed cost and variable cost, and unit cost include only and only variable cost. It is also called cost of goods sold. Now come to the theory of break even point. They board people can ask you the, like in 5 marker they can ask you, okay, calculate the break even point, and in B part they can say you what is the use of this break even point, what is the meaning of break even point. So let's understand the meaning of break even point. See, why we calculate break even point? We calculate break even point to see that what should be the minimum number of sale, what should be the minimum sale or number of units to be sold, so that I should be able to cover my cost. Here comes the meaning: level of sales that equals all expenses required for generating the revenue. And at break even point, this stage is also called no profit no loss. I'm just quoting an example here, listen very carefully. See, when I calculated break even point, the figure came to me that I have to sell minimum 50 units. If I'll sell 50 units, I will be able to cover my cost. Now if I sell more than 50, then if I'll be able to sell more than 50, I'll be able to earn more profit. What if I'm not able to sell 50? What if I sell less than 50? It means I will be suffering the losses. I'll be suffering the losses. Got it? So here it is that break even point is that level of sales that equals all the expenses required for generating the revenue. As I said you, this is the position where there is no profit, no loss. At break even point, total revenue is equal to total expenses. Total revenue matlab the total money received from sale is total revenue. Total expense means the total cost of making the product. And the formula of break even point we all know, it is fixed expenses upon gross margin. In case of single product, this was in class 11, and in case of class 12 we are selling multiple products. So in this case, fixed expenses upon weighted average gross margin. Weighted average gross margin. If you are not aware about the calculation of all this, you can check my video on this topic. Now let's come to the importance of break even point. This is an important question, because if in 5 marker break even point practical question will definitely be in exam. And in B part, or like let's say A part, calculate the break even point. B part, what is the use of break even point? Okay, so let's understand. As I told you right now, why we calculate break even point, it tells us the minimum number of units that we should sell to cover the cost. So the very first importance of break even point is it helps in setting profit goal and sales target, which means what should be the minimum number of units that I should sell. So it helps in setting the sales target and profit target. Second is a very, very genuine point. See, let's continue with the same example, that you calculated your break even point, and after calculating you realize that you have to sell minimum 50 units to cover your cost. Done. Let's say there are 3 products you are selling, A, B and C. A's break even point is, I'll just write down here. Let's say A's break even point is 50, B's break even point is 30 and C's break even point is 20. And which means A, minimum unit of A should be sold is 50, minimum units for B should be sold is 30, minimum units of C should be sold is 20. Now bacha, you come to know that, oh my god, for A I am able to sell only 30 units. What should be the minimum number of units which you have to sell? 50. How many you are actually selling? 30. It means you are not able to meet your sales target. So what should the business do? In that case, business will decide that, let's say, we'll not sell the product A. We'll stop selling product A. We'll discontinue product A because we are not able to meet our cost with the selling. Okay, so this is the second use of break even point. It helps us in knowing that if any product is not contributing to the fixed expenses, they are not contributing to the profit, then let's discontinue the product. Let's discontinue the product. So these are the 2 uses of importance of break even point. One is helps in setting profit and sales target. Second is helps in meeting the fixed expenses and contribution helps in deciding if the product is not contributing to the profit, then let's discontinue it. Break even point also helps in taking product related decision. Product related decision, it can be a one marker question to you. Acha, in case of this unit of sale, just be careful, unit of sale is a management tool, लिख लो यहाँ पर. Unit of sale is a management tool, and break even point helps in taking the product related decision. मतलब which product sale I should continue and which product sale I should not continue. I hope this is done now. Now when you calculate break even point, you know the formula is total fixed cost upon weighted average gross margin. And what you need for the calculation of weighted average gross margin, you need sales mix. Now question comes, what is this sales mix? It's just the name which is difficult, sales mix, otherwise the concept is too simple. See, you are selling three products, A, B and C. Okay, for A you are able to sell 50%, the 50% sales are of A, 30% sales are of B and 20% sales are of C. So 50% A, 30% B, 20% you are able to sell C. Now this ratio of 50:30:20 is sales mix, which means the proportion in which two or more products are sold is called sales mix. Proportion in which two or more products are sold is called sales mix. Now there are 5 assumptions for sales mix which are very simple if you will try to understand them logically. The very first assumption is that sales mix is predetermined. That's what you do when you calculate break even point. Sales mix is already given to you in the question, so sales mix is predetermined. Second assumption, that whatever units you have decided, whatever ratio you have decided, that ratio will not change. Second is the first assumption, sales mix is predetermined. Second assumption, sales mix does not change with time. Done. Third assumption, the cost is divided into two parts, we all know. One is fixed cost, other is variable cost. Very simple. This is the third assumption. Fourth assumption, the fixed cost and variable cost does not change. The fixed cost and variable cost does not change. It remains constant. Done. Four assumptions. Last but a very simple assumption, we assume whatever units I have produced, all will be sold. Means I will not be left with any kind of unsold stock. Okay, so all units produced are sold. I'm repeating class 12. Listen very carefully. This sales mix assumption can be in the exam in the form of one marker, where it can ask you which of the following is not the assumption of sales mix. Or it can be a simple 2 marker question, state the meaning of sales mix and its assumptions. So meaning of sales mix is proportion in which 2 or more products are sold. The proportion in which 2 or more products are sold is called sales mix. And what are the assumptions of sales mix? First assumption, sales mix is predetermined. Second, sales mix does not change. Third, cost is divided into two parts, fixed and variable. Fourth, cost does not change. And fifth, all units produced are sold. Okay, now one more thing, the method which you use for the calculation of break even point, that approach is called contribution approach. This is written in your book also, so don't get confused there. If in one marker you get a question, break even point is calculated by which of the following approach, simple answer is contribution approach. Or in 5 marker he gives you a question, calculate break even point by contribution approach. Nothing, it's just the same method what you are already using, but that method is called as contribution approach. So this was the whole theory of unit of sale and break even point. Done. Now let's come to the next part, that is capital. Capital, what is capital? The funds required for starting, running and growth of and expansion of the venture is called capital. Capital, there is when you start the business, you need two type of capital. You need fixed capital and working capital. First of all, what is fixed capital? The capital which is invested in long term assets, fixed assets. And what are the long term assets? In which the assets, like if I'll invest today, I'll keep on using them for the long period of time. They are long term assets. Plant and machinery, furniture, fixtures, they are long term assets. Okay, and what is working capital? The capital which is required for day-to-day working of the business is called working capital. is called working capital. Done. Next we have is, after let's discuss in detail about working capital. Class 12, this is a very 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 important question for your exam. Let's understand what is the meaning of working capital. The capital which is required for day-to-day working of the business is called working capital. Working capital is of two types: gross working capital and net working capital. Now please listen very carefully. This gross working capital is also known as circulating capital and current capital. Circulating capital and current capital. This gross working capital is also known as circulating capital and gross working capital. So if in paper it asks you calculate circulating capital, it means it's asking about gross working capital. Calculate current capital, then it's asking about gross working capital. And in case of net working capital, it does not have any other name. Now very careful. What if in paper it asks me calculate working capital? Then how will I get to know whether I have to calculate gross working capital or net working capital? Agree? Bacha, if it is working, it's written just calculate working capital, then it is always net working capital. If it will be gross, then it will be written. But if nothing is written in front of working capital, then it is net only. Clear? Now what is the gross working capital? The sum of current assets, the total of current asset is called gross working capital. Now what is the meaning of current assets? There are two types of assets: fixed assets and current assets. Those assets which stay in the business for a long period of time are fixed assets. What are current assets? Those assets which can be converted into cash within a period of 1 year are called current assets. Which can be converted into cash within a period of 1 year are called current assets. And for example, cash in hand, cash at bank, marketable securities, bills receivable, debtors, prepaid expenses, one more thing, inventory, which is stock, and short term investment. Class 12, if it is written only investment, then that is long term. If it will be current asset, if it will be short term, it will be mentioned there. Done? Now in case of net working capital, formula is current asset minus current liability. We know how to calculate current asset. What is current liability? That liability which can be converted into which we have to repay. Liability hai na? Liability means it's a kind of burden on my head. The liability is something which I have to repay. The liability which has to be repaid within 1 year is called current liability. That is bills payable, sundry creditors, outstanding expenses, loan. If it's written only loan, then no. But if it is written short-term loan, then it is a current liability. Done? Now come to the most important topic, which will be sure shot in your exams. I'm telling you, it will be in your exam. This is a sure shot topic, that is need of working capital. Now it is asking you that how we decide that how much working capital, how a business decides how much working capital it needs, whether it needs more working capital or it needs less working capital. We said it's very easy to decide. You just need to tell me about your operating cycle. He says, no, what is this operating cycle? I said operating cycle is nothing, but if I have to give it in a simpler word, I will say cash conversion cycle, which simply means, just listen the word cash conversion cycle, which means the time period or the duration between payment of cash for buying the raw material to receipt of cash by selling the goods. I'm repeating again, the time gap between payment of cash for buying the raw material, and then I'll convert that raw material into finished goods, then finished goods too, then I'll sell them. After selling them, I'll receive the money. Now the time gap between purchase of raw material till sale of goods is called cash conversion cycle, which is also called operating cycle. Now, operating cycle can be of can be different for different businesses. For example, in case of manufacturing business, in case of manufacturing business, they buy the raw material, convert the raw material into finished product, spend the money in the form of wages, make the final product, है ना, and then sell that product in the market. If they sell it in cash, then they will receive the money at the same time. If they sell it on credit, there will be debtors, and then they will receive the money after some time. So in that case, you can see longer operating cycle. In case of longer operating cycle, more working capital is required. So how you will write down? In case of manufacturing business, there is longer operating cycle, so more working capital is required. And if you get this question in exams, making this diagram is a must. If you will not make these diagrams, I have not made these diagrams of my own, these diagrams are in your book. So these two diagrams are part of the answer. You have to make these two diagrams. Okay. Now, then we have trading business. What is the meaning of trading? Trade matlab buying and selling. Buying and selling is called trading business. So you buy finished goods and sell these goods, and when you sell, either you sell it in the cash or you sell it in the credit. Just see how small it is and just see how big it was. है ना? It is so small. Just you have cash, buy the goods, sell them. Either if you sell them on credit, you will get the money after some time. So you can see in case of trading business, operating cycle is shorter. So here we'll say in trading business, less working capital is required. In trading business, less working capital is required. Now, how can you have this question in your exam? And I'm telling you, this is the most important question. This is a sure short question which you will definitely have in your exam. Anyhow, whether it can be 2 marker, 3 marker, 5 marker, anyhow you will definitely have this question in your exam. And what will be the question? It can be a simple question. Why operating cycle of manufacturing business is bigger than or longer than the trading business? Or the question can be, how working capital requirement is decided? You will say working capital requirement differs from business to business. If the business is manufacturing, then more longer cycle, more working capital. If the business is trading, less operating cycle and less working capital. And you have to make these diagrams. If you will not make these diagrams, examiner may decide not to give you the marks without these diagrams. Okay. Now let's move ahead. Next we have is here it is. Now we are done. We are through with the working capital topic. Next topic is inventory control. As its name is telling you, inventory means your stock, and control means the system to control the inventory. The system to control the inventory so that neither there should be excess nor there should be shortage of inventory. Okay. So what is the aim of inventory? Aim of the inventory is physical and physical. See, this physical is related with quantity and this physical is related with financial aspect. If you are successful in having proper inventory control, you will neither have shortage nor have surplus of product, as well as your cost will also be within control. Now, what are the key terms related to inventory control? The first key term is SKU, which is stock keeping unit. See, sometime when you go to a certain shoe shop to buy the shoes, then you would have seen the salesperson using some code word. Okay, you say him, okay, get me 40 size of blue color shoes. He will be saying some code word to the person. Okay, bring X, Y, Z and 1, 2, 3. Now, what's that? That's the code word. That code word is stock keeping unit. As the entrepreneur or businessman receives the product in his store, he gives the code word. He gives the alphanumeric code to his product. He gives unique alphanumeric, which means alphabets plus numbers. Alphanumeric code, and that alphanumeric code is converted into barcode and RFID code. That's your radio frequency code. And that's why when you buy a product, you go to the cash counter. What they do, they scan it. As they scan it, the inventory manager gets the information that now this unit is not in my stock. Okay, that's your stock keeping unit. Then we have motley crowd. You have mix of crowd. You have when you are in your storehouse, you don't have only one kind of product. You have various kind of products. You have mix of different products. So that is motley crowd. The mix of different inventory is called motley crowd. Now another are the factors which helps us in deciding to keep more inventory or less inventory. Space, that depends on if the item is bulky or low value, है ना, or the item is low value or low volume or high value. Lead time, what is the lead time? Lead time is the, let's say I place the order today and it takes me 10 days to receive the order. The 10 days is the lead time, that is the time gap between placing the order and receiving the product is called lead time. Okay, and more the lead time, I need to keep more inventory. Less lead time, I need to keep less inventory. Value, high value products, you need to keep, you prefer to keep less inventory of high value products, and low value products, no problem, we can keep more inventory of low volume product also. Standard versus made to order, you know the meaning of standard. Like you go to the market, you buy the soap, that's a standard product. Made to order, if the product is to be customized as per the need of every customer. If the product is standardized, anybody will come and buy the same product, then I can keep more inventory. But if the product is customized, is to be customized as per the need of every customer, then I cannot have same product and give to everybody. In that case, I have to keep less inventory. Seasonality of supply, if the product is of agricultural nature, in some season we have the supply, some season we don't have the supply, then you need to keep more inventory. Demand is not uniform, if demand is not uniform throughout the year, then we'll need to keep less inventory. But if demand is predictable कि भाई इतना demand तो होना ही है, then you can go with more inventory. Shelf life, if the product has less shelf life, it's perishable in nature, I cannot afford to keep more inventory like fruits and vegetables. But if a product is durable, of course I can afford to keep more inventory. Safety aspects, if the product is hazardous, it's you need to keep special precaution for the item, then please don't keep high inventory, we keep limited inventory for such products which are hazardous. Obsolescence, if the product is of such nature which easily get obsolete, then maybe due to better advancement of technology, in that case you can't keep more inventory of that, you need to keep limited inventory. Now there are two laws related to inventory control. One is Pareto principle, other is ABC analysis. Class 12 Pareto had nothing to do with inventory, but still we are studying his law or principle here. Pareto's law was related to some land, but his law is very good. You know, the rule which he has given is, that rule is called as 80-20 rule. 80-20 rule, and very, very useful. I guess it can be applied to anybody, anything and anybody. What it says, that I'll just start with a very simple example of you people. You people must be having so many clothes in your cupboard, but out of those clothes, there are only 20% clothes which you use 80% time. Yes? And there will be 80% clothes which you wear only 20% time. Same is the case with inventory. It says that there is 20% of the inventory which is used 80% time. So ensure that 20% of the inventory should never be out of stock. There is a 20% inventory which we use for 80% time. But if this 20% inventory will not be available, then my work will be stopped. So ensure that this 20% inventory should never be out of stock. That's your Pareto principle. On the Pareto principles, we have created this ABC analysis. ABC full form is always better control analysis. It says, why don't you think it's better to divide your inventory into 3 parts? Level A, level B, level C. Level A means the most important inventory which I cannot afford to get out of stock. That's your level A. And level B, okay, that's needed. And level C, if it will be finished, it will not stop my work. That's level C inventory. Now, level A is 20% of the inventory which is 80% important. So ensure that this inventory should never be out of stock for this topic, this items. And for B inventory, 30% of the total inventory, but its use is 15%. C inventory, see 50%. You know why we have 50% of this inventory? Because we use it very less, and it is used only 5% times. So better to keep this to divide your inventory into 3 parts, A, B and C. That's your ABC analysis. Some teachers say, okay, this topic is not in syllabus, but no, class 12, these 2 topics are definitely in syllabus, because till date we entrepreneurship teachers have not got any kind of information from CBSE that these topics are deleted. So they are very much part of inventory control. Now next topic we have is last topic, a very simple one. That's your economic order quantity and reorder point. When to order, how much to order is economic order quantity, and when to place the order is reorder point. You can understand this topic in my another practical video of this EOQ and ROQ. Then there are assumptions of economic order quantity. Assumption is future demand is known and uniform, and unit price does not change with quantity. Last is your profitability ratio. There are two profitability ratios, ROI and ROE. Return on investment and return on equity. What is equity? My savings, the money which I have invested in my business from my pocket is equity. And let's say I decided to start a business and I invested 2 lakh rupees of my saving. That's equity. And I took loan of 8 lakh rupees. So how much total money I have invested? 2 lakh is the equity and 8 lakh is the loan. So total money invested is 10 lakh. Fine. So I hope equity and investment meaning is clear to you. When I say return, return means net profit. That's net profit. Whenever it is written net profit, it is always net profit after tax. So net profit, return on investment means net profit upon total investment into 100. Return on equity means net profit upon total equity into 100. Now it says which is a true measure of which is a better measure. See, if you want to know how much income you earned on your money, then go for ROE. If you want to see how much income you earned on total money, total investment, then go for ROI. That's it. So this much is your theory of unit 5. You can get this theory on my, you can get this mind map on my website studyresearch.in. Thank you.